comes alive as traders turn away from Europe and refocus on the Middle East. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Tuesday, the 7th of February. Yeah, crude oil flashes a sign of growing tensions in the Middle East. Bernanke speaks and gold rallies, and we're going to be looking at three stocks today: HARMAN International Industries, LEGGETT and PLATT, and the UNUM group. We'll show you how we did in those three markets. So let's go to the charts. And remember, don't fight the market, move with the market. That's the secret to success. So let's go to our portfolio manager, and we'll start. We've got a lot of markets to cover today. So there's our portfolio manager. You can see all the markets we're covering today. And looking at the equity markets, you can see the Dow, S&P, NASDAQ, all plus 100, meaning very strong upward trends. They're all positive today, by about 0.25 on the Dow, 0.16 on the NASDAQ, and the S&P 500. So let's go to the S&P 500. Where we start, and you can see the market, it was under pressure early, came right back. It seems like the European problem may be coming to an end. I don't know. It doesn't matter because the markets are telling you what they want to do. The line of least resistance, in our mind, is on the upward track. You can see basically our monthly trade trailing kicked in at 1292. That was some 54 points ago, and it's been a nice move so far. And it looks as though that trend is going to continue. We have a 1360, 1370, and 1380 level target zone, possibly going as high as 1400 on the swing. So let's see how that plays out. Next market we're going to be looking at is the silver market. Silver came roaring back today from the support level. If you remember, we've been talking about the support level around the 33 area. Now look at how often this market has hit this level. You can draw the line right there. There's the line in the sand, basically 33. That's the key level. If the market goes below there, if you're long, that's going to be where the stops are, and that's when they're going to push the market down if it happens. But we're still trapped in this trading range, and until we come out of it, you really can't get too excited about it. Also, our monthly trade triangle is still red, negative. So you've got this conflict. You've got a plus 55. That's a trading range, and you really want to watch that very carefully. But it looks as though we're trying to make a turn, but we haven't made it yet. Let's be a little bit more patient on that. And again, remember, we use our monthlies for long-term trend. That's if you're long-term traders. If you're an intermediate-term trader, you want to use our weekly and our daily combined. It works very, very well. So let's clear the screen, go to our next market, which is going to be gold, which has had an interesting day. Chairman Bernanke comes in, talks about it, and talks about the markets in general, and gold actually puts in a very good performance. So we were looking for this market to possibly, and it could still be making that turn. We've got a couple of things going on here. One of which is we have the PSAR, which is above right here. You can see the little dot right there. That means the short-term trend is down, and that's confirmed with our daily trade triangle. The monthly trade triangle is also down, but only the weekly is up. So you've got this conflict, this plus 55, that's a trading range, and that's where we are right now. So we're in a rather large trading range. So I think that we could see that sort of play out. We may go up there and fail again, but generally speaking, it looks as though longer term, the market's probably bullish, but right now it's in a conflict with this trading range scenario. So maybe the best way to be is out of the market until we get some resolve there. But generally speaking, it looks as though we're in a trading range. So let's clear the screen, go to our next market. And lots of markets going on. There's one market in particular I want to share with you that I think could be in for a big move. So let's go to our next market. This is copper. And as you can see, copper got very close to being down into an area that it would have actually triggered the PSAR. It didn't do that, but the low today was 30.8065. We're currently trading at 30.88, so it's come back a lot from the lows. And as I said, we are generally speaking, we think this market's going to go up to the 4 level. We think the trend is obviously very bullish, and that's reflected in our weekly, monthly, and daily trade triangle. So there's the weekly here, the monthly here, and the daily right here. It gives us a plus 100. That's a very strong trend. So that's the bottom line on that. So we're thinking copper is going to go higher. I think it's going to be just a matter of time before we see the demand come in from China rather, and also from the States. So let's clear that screen off and go to the next market. Next market we're looking at is crude oil. This is the one I want to watch really carefully, and I'll tell you the reason why. I'm going to scope this out just to 6 months. There's a 6-month chart you can see right here. I still think this is good. There's our monthly trade triangle at 100.27. We're currently trading at 98, 97, around $99. But it seems to me that potentially what we're doing here is building this sort of large energy field right here. Boom. This is a big energy field. If we get this market going up, there's some tensions in the Middle East. Who knows what's going to drive it? But today's action certainly kicked in our daily trade triangle, and our monthly has always been positive. Only the weekly is negative right now. Now, the weekly, if we see this market really get over, let's say, the 102 level, it's going to be very, very positive. But before that, I think if we hit the 100 level, close over 100, I think we'll see this market has put in a low, and we're going to test the upper boundaries. Certainly the 104 level, which is right here, that's incredibly important. If we go through there, just get long because it's going to go much, much higher. And it may seem that we have just a big move up, a dramatic move up here that could change it. But isn't it interesting? Here we are, we're trading around $100 a barrel. The stock market's going up. Gold is going up. It seems like a lot of these markets are running contrary to what popular belief would be. And this is the key thing we've talked about before many times on the show, and that is don't fight the market, go with the market. They don't pay you anymore for making it complicated or overthinking the situation. Just go with the flow. For example, if the market's going up like this, get long. There's no reason not to. If it's going sideways like this and you're at plus 55, you want to look at our Williams percent R indicator and the Donchian trade channels. And if we just clear the screen off for a second, and I'll show you what I mean. So clear the screen here, and we go down here, you can see our Donchian trade channels right here. You're out of the channel. Chances are, we've talked about this before, it happened here and here, the market comes back into the channel, especially if you're in an oversold condition. And I think that's the reality of this market right now. So we are coming back up. Let's see if it closes over the $100 a barrel level, perhaps tomorrow. But certainly this week is going to be a very, very key week in my mind in this market, because if you look at the weekly charts, and it's easy to do with this with our program, just go to the weekly charts, boom, down to weekly. And you can see how we've just sort of gone sideways, just building this energy field up. If we get over this level, or the 104 level, as I mentioned, or certainly if we see this market this week move over the 102.30 level, I think it's going to be a very, very positive sign. So let's go back to our dailies and go to our next market. The next market we're going to be looking at is going to be I'm going to miss the euro. Actually, I could do the euro or the dollar index, but the euro has actually had a big move today, and this is something that really should be looking at, because look at this euro today. We're plus 70, which is an emerging trend, but this is a new high move. We've certainly catapulted right up. Whether that's Greece, Europe, you name it, it doesn't matter. The reality is this market has gone up. The only indicator we have left that's negative right now is our monthly trade triangle, which is obviously red, indicating the longer-term trend for the euro is down. But I think there's still a lot of people who are short this market, and we could be very close to seeing this trend change to people being bullish on the euro. That's still too early to say, but you can see the mixed results. But plus 70 means it's an emerging trend. It hasn't been developed fully yet. It's an emerging trend. So let's see how that plays out. But generally speaking, we're at the top of the Donchian trade channel, which somehow stops a lot of moves, and we'll see how this works out in the next day or two. See some follow through on Wednesday and, of course, Thursday and Friday at the end of the week. So let's go to our next market. It's the dollar index, of course, playing out exactly the opposite way. One thing I wanted to share with you, which we talked about in today's posting, is let me just put this back here, and that is the Fibonacci retracement levels. We show you this in our posting, but you can see the 77.41 is a 61.8% retracement, the 78.26. You're not that far away from a 50% retracement. And so we could see the market come down to these levels and then eventually turn back up. But generally speaking, these are important Fibonacci levels. In fact, I think they're so important. Let's just take this off the screen. Let's go back to our other market, which is the euro, because you may be following that much closer. And let's just put the feedback on that one. So going from here, simple, just click here. You'll see the little yellow box goes in the top left-hand corner, and pull it down. and you can see the 134.30 area is obviously a 50%, and the 61.8% is 36.21. So these are the areas you could potentially get this market back up to. Certainly the 134 level takes you back into this area of resistance, but this would be a very important levels to watch in the euro. So let's go back to our markets, and let's look at the Reuters Jefferies CRB Commodity Index, which is plus 70. That's an emerging trend, and this has the same feel as the crude oil market, and that is we have a plus 70 emerging trend. Remember, monthly is negative from 335, so substantially higher. And what we're seeing here, and what I want to share with you today, is this sort of large potentially. Whoops, I don't want to do that. So let me just take that off, take this off, go back and put this back on so we get this right. So what we're seeing is this sort of large potential energy field that's just building, that has been built. So certainly this is the line in the sand, the 325 level. If it goes over that level, you're talking somewhere in the 360, 350 area, somewhere towards these highs. And we've been there before. It's not that we haven't been there before, but that will be very inflationary and certainly would not be conducive to what the Fed has talked about in terms of a 2% inflation rate. There'd be a much higher inflation rate for the U.S. and for probably the rest of the world. So let's watch this one very carefully. Again, the 320 area right here was the previous high. If we get over that, then I think it's just a matter of time before the 325 level is taken out. So let's watch the monthly trade triangles very closely on that. This really would catapult into a green triangle once we're over the 325 level, in my opinion. So let's go off the screen, go to our next market. Next market is a stock. We move it today. It's plus 100, and this is what I wanted to share with you. We actually had a signal on the 3rd of February at 44.66. The market's at 47.42. I want to show you how this works. But we're up today 6.58%. That's even where we are right now from the highs. We're actually higher than that. It's come back a little bit. But again, it shows you how the power of these triangles, excuse me, how they work. And you can see even the weekly is down at 39, which is right around here. We can actually put it in very simply. Boom, there it is. 39.81. So again, it helps you keep you in the trend and out of the markets when they're not doing well. So today's big mover was forecasted, you have to say, by the monthly trade triangles as well. So it shows you how you can keep in the market. So next market we're looking at is going to be the LEGGETT and PLATT, I should say. That's minus 100. So we know the trend is down. It's down over 4% today. However, all of our trade triangles are red, indicating the trend is down. I would say probably a move below the lows right here would be a very important area to consider. That's the 21.29 level. It's 22.39, so another dollar lower. This could be under pressure, but you can see how it was lower, came back, but still lower for the day. We probably have a little triangle there. Yep, we do have a triangle there, indicating that we could see some more defensive action. But this is not a particularly exciting chart for me. It sort of moved sideways. I would say that let's just scope this out and get a little bit more history on this market. Let's say the last 5 years, and let's take some of these things off. So I would just give this one a pass. I don't see anything exciting, but it was one of today's big movers. The next market is the let me get closer because you can see it then. This is interesting because if we put our triangles in, it's plus 85, meaning it's a strong trend. Now this came under pressure early today. Now the buy was 23.71, and you can see it's 22.84. Now the question is, should you buy it? Well, yes, you should, because that's the way the trend is going. Frequently we see where a signal will come in on the monthly, and the market will go up and then maybe have a pullback, and people say, oh, it's not working. These are longer-term trends, and I think that's the key thing to look at. And if you go into these markets, you can see here's the monthly trend right here at 24.75. So it's a long, you actually stayed in this market if you're just trading on the monthlies for quite some time. This took place on June 10th of last year. So again, these signals don't come along that often. When they do, they're very important to watch what is going on. And this would be a buy signal with a plus. I would definitely say this would be an area you'd want to be a buyer of this stock as opposed to a seller. Hey, lots going on, we've got a lot happening, but you know what? Ask yourself this question. Is personal one-on-one Market Club coaching right for you? You can get a free consultation. It's not going to cost you anything. Just give us a call. It's a free call, 877-219-1482. We'd love to hear from you, and we'd love to tell you about this program because it's helped many, many traders, and I know that it can help you if you're wondering how to improve your trading. This is one of the best, easiest, fastest ways for you to have one-on-one Market Club coaching to help your trading, to help you get your bottom line to a healthy bottom line. Isn't that, after all, what we're doing here? That's helping you make money. That's our goal. Anyway, Adam Hewison for Market Club. I'll be here tomorrow, same time, same place. So I'll see you then. Have a great trading day.